All right. Just want to review some trends and see how clear they are. So we'll start here. You see the market, still downtrend, all red, 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 red. Right? And then over here, you get the price volume right there. There was something going on here as well. Anyway, here it just rallies. You get a good price volume, some pressure right here. See that big green? So, all of that, and then it pulls back, very small waves. Very small waves. What does that mean? That means if the up waves are bigger than the down waves, and the up waves are extremely strong and the down waves are extremely weak, the market's going to turn. That's what that means. All right. Over here, you have that rally, as indicated by RLY. And here's the volume increase right here on biggest volume, 12 bricks. Order here, tapped, and goes to target. So what is this really doing? You're looking for big waves or you're looking for rallies. Here you had a pullback and then a rally, and that rally offered a pullback opportunity. Really, it's that simple. All right, there's two types of trades. Okay, there's two types. I should have mentioned that a while ago. The first is the turning point trade, right, where the trend turns. But the second is the continuation. That's when you jump on an existing trend. So in both cases, right, you need to know how to enter. That's what this is really about. Right, so the market, yes, turning point is very important. Jump in and you ride the entire trend. But what if the trend is strong? What are you going to do? The answer is you jump in. Right? One of the things that someone very smart told me, when I explained to him I was trading turning points, he said, and opportunities were higher up. He said, well, why aren't you getting in? Because you have much more opportunity on existing trends than waiting for them to turn. Anyway, that's a long story. The whole point here is you had the rally, pullback, rally, and tap and enter. So here, now again, what happens? The market starts getting stronger on the downside and smaller on the upside. So I don't know, what do you think is going to happen? Gives you another trade, that's all. So the waves are big on the downside and small on the upside. You tell by big wave, big wave, big wave. If it does that, sell. So you have some change over here in the heavy volume, but definitely here. Right there. That's, and the pressure is very obvious. This is meaningful, more meaningful when it's in a big wave and the wave itself is strong. So, long story short, tapped, as I explained so many times before, big volume, price goes to it, sellers defend, buyers exit their losing position, creates continuation to the downside. So it continues to do that until, lo and behold, big waves, biggest in 12 waves right here. Big wave, biggest in 12 waves, pullback, rally. All this effort didn't go down. Instead, it went up. This is the reversal. Tap and fly. So the principle here really is the same. in that bang, big price volume, pullback test, rally, volume over here, let it get tapped, and let it rally. Just like that. Okay. So, in terms of Wyckoff, this is your change of behavior. Y, biggest price volume, 42 and 20 waves. Over here, 1 bar pullbacks, 1 bar pullback, 2 bar pullback. No supply. No supply and inability to go down. What does that mean? I mean, if I show you this, 29, less than all of these waves except for this one. At least less than the prior 3. So this is your lack of supply here. And then it rallies. And you just have to get in on a tap. And sometimes you'll get stopped out, but the risk is quite small. The reward is massive. And that's what you really need to just now over here, it's 2 bricks. The reward is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Around 10 or 11 bricks. That's 5 to 1. Here, I don't even know how much this is, but it's a lot. Here again, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 15, 16, 17, 18. So the reward and the risk, because you're going to have losses, the whole point is they're so insignificant that it's irrelevant. Right? So sometimes it will go right through and then reverse. So you just have to accept that. This is interesting because this is selling. There's a lack of demand, but they wanted to do one more rally before the break, and that's a variation. Sometimes that happens. It's basically to complete the move. Once this signal is sell positions are taken, just complete the move, cause some type of upthrust, and then break. See? So sometimes you just get the lack of demand and it goes down, and sometimes it goes down from an upthrust position. Whatever the case is, just be wary of times of high volume, high volatility, because things don't they just don't make sense then. All right, so it's much difficult to trade. But very clear. What is this? To change behavior, these pullbacks, no volume, no nothing. This is very, very weak. This pullback here, it's a lack of supply. Then you had confirmation. Then you had a tap or a test. Same principle. You call this a change of behavior, you can call this a change of behavior. Right? That was your low volume pullback, but it's smaller than 1. It's not smaller than this, but it's smaller than the second, the third, the fourth, the fifth, and the sixth. No, just the fifth. So that was your lack of demand. And I tapped in. Same here. 29 is less than this. It's less than the prior 3 waves, and the ratio is very small. So, meaning 144 to 29, or even in these bricks, how many bricks? 9 bricks to only 1 brick. Then goes up, taps in, and goes. So, I mean, this is the basics of Wyckoff, like real wave chart reading. This style is 100% directly from Wyckoff, right? The waves, and here I modified it because he used point and figure with volume. I use Renko with volume. He used one tick. I don't use one tick because that's not relevant in today's market, because the markets are much more volatile and have many more participants. So anyway, long story short, this is how you do it. Take care.